Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 18th of January, 2023. And we're publishing our gold forecast for this year, with the silver forecast to follow on Friday, the 20th of January. So let's not waste any more time and get to it. In 2022, we saw gold open initially on the 4th of January at just shy of $1,812, rising to $1,936 on the 24th of February, when Russia invaded the Ukraine, and then traded as high as $2,050 in early March, though the highest close we found was on the 8th of March at $2,039. Now bear in mind that gold's all-time high in dollar terms was $2,075 in August 2020. Now what immediately cut gold short in terms of further rises was the initial raising of the Fed's fund rate from 0% to 0.25, rising to 0.25 to 0.5 on the 16th of March, only for us to witness a total of 7 interest rate rises totaling 425 basis points for 2022, with the last rise being 50 basis points in December, resulting in an ultimate or climatic Fed funds rate for the year at 4.25% to 4.5%. So at the lower end, the Fed funds rate went from 0 to 4.25%. The next announcement will be on the 1st of February, just 2 weeks away. Now, during the course of the year, we saw gold fall to its lowest closing level at $1,618 on the 28th of September, with it closing very close to that figure again on the 3rd of November at $1,620. And the general consensus at that time was that gold could indeed dip to as low as $1,500 if the Fed maintained its hawkish stance and rhetoric, which it did not, suggesting that whilst interest rates may have further to rise, these rises were more likely to be smaller rather than the 4.75% rises we saw up to and including the 2nd of November. And indeed, they reduced the December rise to 0.5%. But do not forget the fact that rates are still rising, though perhaps at a lower percentage increase. Now also, bear in mind that in June, US inflation reached a 4-decade high of 9.1%, and gold then began its second half descent below $1,800. Now, gold finished the year at 1823, up almost 0.5% for the year, though some tables may differ slightly depending upon which markets the assessment was made. So you may see some figures quoting that gold finished at 1814, potentially similar to when it opened or marginally down at 0.3% for the year, New Year's Eve to New Year's Eve. But overall, regardless of which figures one takes, the difference between gold's opening price and closing price in 2022 was little to shout about, save one thing. We saw a significant rise in interest rates, and gold still managed to hold its own, even though the dollar index rose almost 8% for the year. Now that said, we also saw a significant rise in inflation in the United States, with an average increase of 6.5% for the 12 months ending December 2022. And we all know the inflation rates are fixed or fiddled anyway. Inflation's a lot higher than that. And so arguably, gold's inflation hedge for the year was not at all impressive. However, it could potentially make that up this year. Now, Philip Newman, the managing director at Metals Focus, explained that gold's performance in 2022 was the result of two major factors. Quote, Obviously, the first one is the war, where we saw prices spike for a range of precious metals. You had that flight to safe havens that obviously dominated everything as you would expect, then dissipated. And secondly, quote, what came to the fore and is still the most important is really the macro backdrop and drilling down further the actions and expectations of the Fed, unquote. Now, looking back, it's interesting to see, for example, BMO Capital Markets, UBS Global Wealth Management, and Reuters all predicted the gold price in 2022 will average $1,700 to $1,800 an ounce. In their 2022 gold price forecast, analysts at the UK-based precious metals research firm Metal Focus said they expected gold prices to average the year around $1,830 an ounce, which would be a record high average price. Now, moving on to 2023, which is what we're really interested in, longforecast.com sees gold closing at its highest level in April of this year at $2,137, though touching $2,244 during trading, but ending the year at $1,831. So it sees it sort of peaking during trading hours at $2,244, but ending the year down at $1,831. Now, Jeff Clark of goldsilver.com predicts for 2023 a number of criteria. The minimum high for gold, 2,100, so he's confident of that. Potential high with no crisis, 2,250. Potential high with crisis, 2,700. And the likelihood gold is higher in 2023 being 90%. Then we had a number of figures from various institutions, some of which came and were published sometime between September and December, and they may have changed some of their advices during the course of that quarter. Societe Generale predicts gold will average around 1,550, Fitch 1,600, ANZ 1,650, Reuters 1,750, ABN AMRO 1,900, Commerzbank 1,900. Trading Economics expects gold to trade at 1,944 by the end of quarter one, and by the beginning of 2024, perhaps in the first week, will have reached $2,017. Now, BMO, back in October, downgraded its gold forecast for 2023 to an average of $1,680 an ounce. Coin price forecasts see gold end the year at 2,200. WalletInvestor.com sees 2023 end at 1953. And Jörg Kiener, Managing Director and Chief Investment Officer of Swiss Asia Capital, says, quote, gold prices could surge to $4,000 an ounce in 2023 as recession fears persist. UBS believes gold will hit 1,900 by the end of the year. And Wisdom Tree analyst Nitesh Shah added that prices could easily move above 2,100 an ounce by the year end. So what do we believe will happen to gold prices during 2023 and by the year end? Well, we've taken into account multiple critical factors. Perhaps the top three being the Fed's position on interest rates, which we see peaking between 5.25 and 5.5%, that's the Fed funds rate, and potential cuts by the end of the year from that peak. In other words, the Fed reversing its process of rising rates to one of beginning to cut them again. The US dollar value is another key criteria, with the index currently just shy of 103. We believe it will fall below 100 by the end of the year. That's potentially giving gold a bit of a fillip. And the potential for a global recession, if that does come to the fore, then of course the Fed will alter its interest rate stance, and this will help gold, but potentially harm silver, and we'll cover that on Friday because of potential impact on industrial demand. Now, in addition to those three criteria, of course, inflation inflation, inflation are the three criteria none of us can afford to forget. And one can only hope that the interest rate rises that will occur will gradually reduce those figures. But we are not going to see a 2% inflation rate by the end of this year. Be absolutely confident and certain of that. We've also taken into account certain geopolitical concerns. Obviously and clearly the main one is with regards to Russia and Ukraine. No surprises here. But further turbulence with China, potentially North Korea, plus, though, a disturbing political but not military conflict between the US and Europe. We have some insight into this, and we think there may be some quite significant tensions, potentially around energy policy, but also some of Europe's stance towards other countries. And we'll cover more on this in the months ahead. It's an interesting geopolitical landscape that's worth investigating. Now, throwing all of this into the melting pot, our forecast for gold in 2023 is not remarkably adrift from Jeff Clark of goldsilver.com. For once, perhaps, gold, silver and us will be in relatively close alignment. Now, we forecast that gold, without any major black swan, could actually reach as high as $2,200 and $2,400 if there is a mild crisis. We don't really see it going much above that. However, we do expect to see gold trade between $1,900 and $2,000 by the end of the year. Now, that said, so it's moderately bullish, gold could, however, dip to as low as $1,600, but we only expect this to happen just prior to the peak in interest rates at or just above 5%, though most of the trade we see moving between $1,700 and $2,000 for much of the year. Of course, we've taken into account what we believe will happen to gold demand for investment purposes and correlated this against equities, cryptocurrencies, which are on a bit of a trailblaze at the moment, but we believe that will be short-lived. But also to compare it against traditional interest-bearing investments, because with interest rates above 5% or at 5%, of course, certain interest-bearing investments will look not hugely attractive, but moderately attractive. So our forecast is gold trading by the end of the year $1,900 to $2,000, with it more than likely touching $2,200 this year, and not ruling out the potential of it hitting 2,400, but potentially going as low as 1,600. We don't really see it going below that figure, but more than likely trading realistically above 1,700 up to the 2,000 mark. What do you think? Do you agree with us? Disagree? Agree with some of the other pundits? Do you see gold potentially going down considerably more or rising considerably higher? The likes of Gerald Celente is talking about multiple thousands, $4,000+, $5,000, $10,000 gold in some cases from some of the pumpers out there. We don't envisage that happening. The value of the dollar must collapse before we see that occurring in the short term. Not going to argue over a 10-year period, however. Do share your thoughts. Thank you for listening. Please subscribe, press the bell sign, and watch out for our silver forecast on Friday. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.